Welcome to #Got Money. As a lot of you know, I've got a particular penchant for the property market. I love it. I love real estate. I love houses and anything that you can touch and see. I worked for Merrill Lynch for a while, so I'm a little bit about stocks and shares. Now, to demonstrate my love for the property market, I've invited another Kiwi who I think is a bit of a ripper. Really great sound financial background, which I love. A very clever man. I welcome Tim Boyle from Finalytics Financial to #Got Money. Hey Tim, how are you?
Hey Elizabeth, excellent, thank you.
Pretty interested. You wrote a book called Escape the Rental Trap: Buying Your First Home in seven Simple Steps. What motivated that? Like, where did that come from?
Yeah, right, okay, very quick backstory because it's not all about me. So essentially my background is very financial, so chartered accountant, blah, blah, blah. Then I went into management consulting, worked for an American company in the corporate finance world for many years. And a very long story short, I had to get out of all of that for health reasons. And funny enough, during that time, as I was going through a bit of a health period, I wondered what I was going to do with my life. Always loved finance, as I mentioned, always loved property as a fundamental investment, a little bit like you, funny enough. Also loved the equities market and had a lot of exposure to that. But property, no doubt, once I sort of started to understand the economics of it, led me into property quite a bit. During that time as well, I was sort of wondering how I'm going to transition from corporate into whatever life my health might let me to have. And so I have quite a passion for first home buyers. I do believe that there's a lot of misleading, a lot of old sort of generational old rules that don't apply anymore. And it's made to think that it's a lot harder than what people think for first home buyers to get into the market. So therefore, at that time, I penned that book up. It took me a few months in various places, including hospital beds and so on, and developed that book because the title of it was quite purposeful. It's Escape the Rental Trap, because we all know that rental, regardless of these quite trite documents you might, or articles you might read in the newspapers now and then, all you need to do is roll yourself forward to near in retirement. Think if you're going to rent for the next 30 years post-working, then good luck. And so I was always escape the rental trap. Now, the trap to me is the longer you leave property purchasing, the harder it is to get into, okay? And that's the trap. So that's why I call it the rental trap. And the to escape it in 7 simple steps, because I'm a bit of a simpleton, and so I like to break things down into very simple terms. Property is not one of those things like you have to cook it up in a chemistry lab. There's some basic rules that you follow, go through a process that's proven itself literally over decades, and it'll see you right. So that's a bit of the background on that.
Yeah, I'm a bit like you. I kind of came into the Australian market and understood that there were people that treated the property market like it was a secret sauce and they weren't going to give it out to anyone. And it was like, oh, actually, it's as long as you choose the right professional to work with, and I always caveat that you choose the right professional to work with that has your back and has your financial destination in mind, there is a way for you to own your first home, and safely and confidently.
Yeah, it's interesting. I'll just finish and agree with you on that point. And again, it's a bit similar to the equities market, because people need to make it look complicated because there's lots of money to be made by so-called advisors in property. But if people realize how simple it actually is, you don't need to pay somebody tens of thousands of dollars to do it. So anyway, so that's just to finish your point. I agree with that.
I had a client call me and was stuck quite badly, had signed with a large company and had ended up agreeing to buying two properties in two years or in 18 months. And one of them was an apartment in a highly densely apartment populated area, and had no way of getting out of it. And I kind of realized then that there's a place for people like you and I, Tim, just to get out there and try and protect these people as best as we possibly can. I get your weekly reports, and I was really interested in getting a view from you about where you think the current property market is here, particularly in Melbourne, because we're in a lockdown. What are your thoughts about what we're in right now?
Yeah, wow. The future. Right. Okay. So look, I'm in Melbourne as well, by the way, for those watching and listening. And I think the second thing has really hit us. There's no doubt. It's hit confidence, and it's going to hit confidence for a long time. Let's not cut away from that. So look, the way I think about property, COVID or non-COVID really, is that again, coming back, I'm a great believer in models that are quite simple. So go back to anybody who's done economics 101 and even high school economics. There's only two laws in any market, and one's supply and one's demand, right? And so what it takes is just to peel back the onion on each of those and say, well, okay, what feeds supply and what feeds demand? And so my view of that, the supply is probably the easier one. So that's made up of new homes, constructed homes, and also how many properties are being put on the market each week on the auction market and private sales. So that's the supply side. And that's why you got to be very careful on areas, because blind man can see if you go out to areas on the outskirts of any major city in Australia, you can see the supply in front of your eyes, right? And so that's the supply side. The demand side is slightly more nuanced, but again, we don't need to overcomplicate it. So my particular view on that, it's population growth has been a huge windfall in many aspects, including politicians. I won't go there, but population growth has been, I call it the tomato sauce on a smelly pie as far as economic management goes, because
yum.
yeah, we all love the tomato sauce. So it's needed because you can get away with a lot of bad economic decisions as a country if you've got growing population, because your GDP will grow by the population growth rate, which in Australia is between about 1.5% to 2%, and in Melbourne and Sydney to a lesser extent more than that. So that's a sort of an economic free kick. But in terms of property, of course, it's such a driver of demand. Now, I don't care about owner occupied versus tenants and all of that, because a roof's a roof, right? So somebody's going to live in a house, most people. And so therefore, whether they're tenants or owner occupiers, there's going to be housing demand. Who's going to own that house might be slightly different, but I don't need to go there. So that's been a huge driver of the demand side, is population growth. So the challenge, to come back to your question, is, well, where do we go with that? Because we're not going to see it this year and we're not going to see it next year. So that's a huge unknown. So I'm not going to gloss over that, because to me, that's the biggest challenge for Australia as a whole, and particularly for property in cities like Melbourne in particular, and Sydney, and to a lesser extent, maybe Brisbane. But so that's what I think is a key part of the demand. Then you get into other aspects like interest rates, right? Because affordability does play a part. Not as big a part as what people think, because you read again in the papers and so on, a 500-word article that talks about the unemployment rate. Might sound controversial. Unemployment rate does not impact property prices significantly at all. And so, of course, it affects people's affordability, but again, people have to live somewhere. So maybe they can't buy the house they want, but they have to rent or do something. So the key thing, though, is interest rates, because interest rates make it either affordable for owner occupiers or make property a better investment. As a side point, to bring it back to your equity thing, the US stock market is higher than it was on the 1st of January today. And people go, well, why is that? If the economy's taken such a hit? Well, it has, but there's this sort of recognised thing of interest rates. And that's, again, been a double whammy for Australian property for years now. And we can dig into that a little bit more if you like. I won't bore it too much on your question.
So we know that we've had 250,000 temporary visa holders leave Australia. We expected 300,000 in this year. They haven't arrived. So let me paraphrase what you just said. So you think the only lever that's available to the Australian property market then is interest rates? Is that right?
Yeah.
Is that accurate?
Yeah, no, I wouldn't say the only lever, by the way.
Okay.
Yeah.
What else have we got? What else have we got to play with there, do you think?
Well, then you get into what's your viewpoint and what's your horizon, right? Your investment horizon. Again, bringing it back to the equity market. I bring that up because it's quite a transparent market. It gets repriced every day and so on and so forth. Yeah. But just because a company has a bad year doesn't mean that people are going to if a company's profits are down 50%, it doesn't automatically translate into a 50% share price reduction because people see the longer term cash flows. Exactly the same for property. So I wouldn't say if you've got a 6-month time frame, you might be right, but nobody buys property with a 6-month time frame. If you do, then you shouldn't.
Yeah, exactly
But
right.
if you've got a 5-year time frame, then you've got to sort of take a view on that. So I'm not giving you the answer. I'm giving you the factors.
Part of your business is to advise clients inside of property investing, which I love, and that's my space. It sounds to me like you work in a view, if you're going to get in, you get into the market in a long-term view. You do not do it. It's not the casino, it's the property market. Do you feel like it's still a good landscape considering, let's pretend that we're out of COVID, COVID lockdown, we've come through 6 weeks. Do you believe that it's going to be a conducive environment for investors to come back into our market?
Yeah, I do, Elizabeth, and now let me again. I think we're going to have a different view on life.
Oh, maybe not. Maybe not. I might surprise you.
Okay. So keen to understand that. But look, let's just say fundamentally, I was just going to say, in terms of property, it won't be that different. Okay. Now, when I say a different view, I think we might look at things like CBD, accommodation, and all that quite differently, and sort of the types of properties that people want to buy. And I don't believe that everybody's going to suddenly be working from home all the time, by the way. So there's going to be a hybrid model, but people are going to think, oh, okay, if we're going to spend more time in our home working a day a week, we might have a different type of property as opposed to a nice, cafe style one in Brunswick or something like that. So there'll be that sort of nuances going on as well. But I think, look, overall, people are people. I think we all like being around others, and fundamentally we all will, and I think this will continue and more so, to be honest, is that we're going to want to own our own properties. The great Australian dream will be there forever because it needs to be.
Yeah, exactly right.
A different discussion altogether, but even from a society and economic point, it does need to be there to own your own property.
The builder's bonus was genius, wasn't it?
Yeah, it was. And I'm only saying, I'm saying it tentatively. That's a bit like saying JobKeeper was genius.
Oh, okay.
Because the key is what happens on the other side of it.
Do you think that the government...
Are we just pushing the kink in the rug out a bit further?
Yes, so that was the other question there too. Were they too limited in the 6-month scope? Should they have provided a longer term solution?
On the builder one?
Yeah, on the builder's bonus.
Look, in fairness to the government, I think better to do that than to be seeing all the building industry and construction industry lining up for JobKeeper. So, and look, if people in longer term, and I've had lots of clients, quite a few clients that we've got them into building their own homes as a result. Picture somebody in regional Victoria, like they've got $45,000 between the first time owner deposit scheme, first time owners grant rather, and the builder bonus. So 45 grand if you're building a property in Ballarat, that's a pretty healthy deposit.
Yeah, it's a beautiful deposit for them, isn't it? I mean, it's just...
Yeah, it's a dream. None of your own.
Gorgeous. Yeah. What I noted, we did a number of purchases for clients in that space, and what we found was, while every endeavour was made to make sure that everything was compliant, the difficulty is dealing with the banks right now. How are you finding the lending environment for these clients that are desperately trying to reach, because they're really trying to get everything done within a very, very tight time frame? How have the lenders been?
Yeah, look, so let's face it, like all the other things that have been thrown out from the government since COVID, it is policy on the run. Nobody's planned for that. And we'll stick to the home builder benefit because that's one we were talking about. That was announced on the 4th of June, I think it was, as at only this week, being the 14th of August, did the Victorian government officially sign up for that. Okay, so all that time we've been in this void. And again, this is not criticism, it's just fact of whatever. So it was policy on the run, not implemented, wasn't ready to be implemented. So the banks in fairness to the banks, they are my frenemies. We need them, but we don't like them. Look, in fairness to them, they weren't ready for this. And so it's been a pretty frustrating period. So with my clients, we've had to cover that and show that they do have the funds if they don't qualify for that. And just this week, the Victorian, probably came from the central government, the federal government, allowed another 3 months in Victoria to start your construction. So that's quite a flexible policy, that one. As long as you sign up for the land this calendar year, it used to be you'd have to start the construction within 3 months. And this week it was announced in Victoria, they'd be 6 months.
The only issue with that, and I was speaking to Melanie, I got money lawyer on this,
right,
is that we're seeing a glutton of, and let's use Geelong as an example in Ballarat. We've seen huge, we've seen huge transactions into those particular marketplaces. For the builder to go and get the building permit, we spoke to Geelong a week ago, and Geelong said, the council said to us, look, we literally have a 3-month backlog of people that need building permits.
Yeah,
so while it's really great that they've given us this 3 months, by the time we get the files back from the banks and then we give them to council to get the building permit, that time is actually waned away. And it's still a pretty tight time frame, because I don't think they expected, or maybe they did, they expected the volume, but nobody was ready for the volume that came through. Some of the city councils are literally throwing their hands in the air.
That's a great point. And I personally haven't come across that, because my clients who have come to me, all the approvals have been done, right?
Oh, great.
And so then you get into the point, well, does the builder's bonus then, would have that happened anyway? It's a bit nuanced, but in your example's a great one. It's one person I haven't come across nor thought about, is that, that approval process is pretty important.
It's pretty tight and pretty limited.
Yeah.
So what about, if you're working with a client today, where are you sending them for their lending? Because I was told...
I'm not going to use bank names.
No, you don't have to. But look, one of our banks out there, they're not picking up the file for a month for lending.
Right. Yeah. And I know who you're talking about.
Yes, you do, don't you?
Yeah.
And I'm just... busting to say.
I know. No, look, great question. So let's, I know your question. Look, it's really frustrating. And look, banks, to be honest, it's really shown them up, this whole thing. I mean, they've been slowly and surely pushing things offshore for years. And this has really come back to bite them in the proverbial. And, I won't pull them apart, but you'd be thinking, if you were a board member or a risk control person or a CEO or a general manager even, you'd be having a contingency plan in your business. Clearly, some of them don't. And that's been the main cause of the blowout, regardless of all the other crap that they tell you. That, to me, I know this, is what's caused their approval delays. So, you and I both know a buyer's advocate, and she was telling me the other day, some clients are asking for a 5-6 week finance clause on a purchase. I mean, that's just ridiculous. So in response to that, we've still got banks that are doing approvals within a week. And so hail to them, right? And so if that's a factor, and look, I'm not talking one bank, there are a few, but there are still those capable of doing that.
That's extraordinary, because we've literally had files that have been open now for 3 months, and every time we get a call from our lender, our clients are asked to resubmit the information they've already submitted.
Oh, yeah. I've actually got a toupee on today. I have lost a lot of hair in the last 3 months just going through all of this.
Yeah,
that's not true, by the way. But
no.
I know what you're saying. I mean, the resubmission and just the whole processing, it's shocking. Let's just say, but that doesn't apply to them all.
That's good. So I was recommending our clients just get pre-approval before they come through to us, but you like to manage the lending yourself, don't you?
Yeah, well, and just to clarify, right? So we're brokers as well. So, okay, so some banks aren't doing pre-approvals, right? And some of those ones I mentioned earlier who are doing very quick processing time, they just don't do pre-approvals anymore, right? So, and that can cause a lot of angst. I remember the first bank that did that probably about 15 months ago, said no more pre-approvals, and everybody threw their hands up, and how can you send a client to an auction or something like that? But again, it puts more onus on the broker. And if there's any exceptions, if we've got any doubt whether a deal will go through, I mean, we've got all their lending calculators and everything else, we are allowed to raise that in advance and say, look, can you look at that and get that assessed prior? So it's interesting, because I wouldn't put in a pre-approval right now with a view to taking it somewhere else or anything like that. Personally, it's just double the work, double the stress, doesn't help the client's credit file, and I don't see a huge advantage. I'd sooner go to a more efficient bank. And I've said to clients, you know, even if the rate is not the sharpest in the thing, don't worry about interest rates too much. If it doesn't normalize, you know, we'll keep reviewing it in a year or year's time. We might move that then, but let's just go to somebody we can rely on that'll get you into this property. Because at the end of the day, whether you're paying 2.99 or 2.79%, that doesn't make a big difference in a year's repayments.
So you've always been a really big advocate for established real estate. Has that changed in this climate for you?
Yeah, no, I don't think it has, Elizabeth. And so caveat it on what I said earlier, there's no question the home builder and the incentives now in existing. How can you ever say that that would be a bad thing to do to get $45,000 towards your deposit if you're buying in regional Victoria? So from that point of view, it has. But if you're not up for that, you're not first home buyer, you're an investor or something like that, no, I think established, proven, and the proven areas holds true. I wouldn't jump out to Outer Mountain just because I could get sort of, you know, something where I might be able to afford to buy Inner Northcote or something like that. Not knocking people from Mountain and not recommending Northcote.
No, but there are some areas that are densely saturated with a lot of units, and they don't have population density to continue good trajectory on growth. And that's it. You and I are really big when it comes to doing research, particularly for investors. So we know that would be what that was caveated under. Do you think we're going to see in the next 12 months, do you think this market will stabilize itself?
It depends a lot, doesn't it, on things that we don't know. So it does depend on COVID. If we go into more lockdowns and that, who knows what the world's going to look like. We had some of
our friends say, and I was reading this research this morning, Louis Christopher said 30% drop in Melbourne house prices, and CoreLogic said 40%.
Yeah, look.
I knew that. I just wanted to give you a wee giggle, actually.
So I'm not going to use those two. So let me go to the real doom and gloomsters like the Harry Dent and those famous ones who pop up in the tabloid press every few years. If you followed their advice in 2011, you'd be still renting on property that's more than doubled its value. So frankly, it's pretty easy to get. I could phone up and say, I think property is going to drop 80%. I might get a snippet in the press. Well, if that's all, if you're relying on that, good on you. I hope you like it. I remain to see some convincing argument and true analysis to show that that's true.
So you're optimistic?
I am very cautiously optimistic. The reason I say very cautiously, look what's happened across the Tassie this week. Who knows, right? So if COVID is something that we can't solve in the next 12 months, let's just say that, a proven vaccine, all these vaccines being routed, none of them have been proven yet. That's not a nice scenario. The risk, by the way, is do nothing. So at some stage you have to take a view, and that's why with property, that's why I say to my clients, don't worry about it. If you can make the repayments at these record low interest rates, just do a Rip Van Winkle and go to sleep for 5 years. Don't look at what property's doing every month in the thing. And so, you know, don't stress. In 5 years' time, COVID will be something we talk about, not live with. In 1 year's time, who knows?
I was reading your profile today, and I noticed you and I have been through the same property cycles. I was in London when we had the .com crash.
Right, yeah.
we had the global financial crisis. We had when they went into Kuwait, we saw a collapse in the London market. Look, we always see sometimes a little pinch in the property market, regardless of what we've been through. But at the end of the day, and you said it earlier on when we started this interview, people have to live somewhere, don't they?
Yeah, absolutely they do. And like, you know, Australia, as it has for the last 100 and whatever years, has relied on that. And, you know, Australian property or any other property, well, I'll talk about Australia because people say, well, what about the US and blah. You can't compare countries' property, so don't worry about it. But in Australia, you know, we've gone through 2 World War Wars, a depression, don't know how many recessions, and guess what? In any 5-year period, property is still higher than it has been the 5 years prior. So
I agree.
I think that's the best way I can rest the case.
Tim, thank you for joining us. Look, Tim and I want to finish on this note, and I'm going to let you say something about this. I've got an autoimmune disease, and I don't talk about it very often, but I am a real advocate that people wear masks. Yeah. Because if you don't wear a mask and you come in contact with me, you could probably kill me. And I want to use this forum just really quickly to say that I want you to wear a mask. Want to say anything about that, Tim?
Well, personally, I'm immunosuppressed as well. So I relate this quite simply, just to wrap it up, is that I work in the healthcare industry. A lot of my clients are from the healthcare industry. We've got young nurses in their early 20s, not just with masks, but the full facial, full PPE, working 12-hour shifts, no complaining, nothing. So if you can't suck it up, put a mask on to go outside, then take a good hard look at yourself and think of many others. That's all
exactly right. If I ever see anyone complain about wearing a mask, I'm going to send them to your house, Tim, and you can sort them out. Yeah. Thank you for joining me, mate. It's been lovely having you on the show. Be safe, everyone. Be well. Obviously, if you've got any questions for Tim, please email us here at Got Money. Or Tim, how do our clients get hold of you, or our listeners get hold of you?
So my surname is Boyle, B-O-Y-L-E. So it's tim.boyle at fin.com.au, or our number is 1300 fin VIP.
Beautiful. Thank you, mate. All the best. Stay safe, stay well, everyone, and we look forward to hanging out with you next week.
Thanks, Elizabeth.